Does Medicare cover weight loss medications? And the answer is, unfortunately, Medicare will not cover weight loss medication. The good news is there's an alternative way to pay for weight loss medications, which I'm going to show you here in a second. But if you didn't know, weight loss medications can be really expensive if you have to pay out of pocket. So Ozempic is $900 to $1,200 a month. Now, Medicare will cover Ozempic if it's being used for diabetes, but not for weight loss. Wegovy is $1,300 to $1,600 a month. Saxenda is $1,300 to $1,600 a month. So realistically, you're looking at anywhere from $900 to $1,600 a month, and that is a lot, especially for people that are retired living on a fixed income. So then the question is, how are you going to pay for the weight loss medication? Because already we know Medicare is not going to cover it. There may be Medicare Advantage plans that may cover some or all of it, but it's unlikely that they're going to cover it. But you could reach out to your Medicare insurance agent and see if there are any Advantage plans that will cover, again, some or all of the cost of certain weight loss medications. So where most people are going to end up is using the retirement savings, which, again, that may or may not be a good idea depending on how much money you have in your retirement and then how you drawing out a significant amount of money each month and every year to pay for weight loss medication. What does that do to your retirement plan? Obviously, you could use credit cards. I mean, that's just, in my opinion, a horrible idea because you're just going to bury yourself in credit card debt. And it's just a slippery slope that you don't want to go down. But like I said, there is the alternative to pay for weight loss medications, and that is to pay for them with a reverse mortgage. And there's several reasons to consider the reverse mortgage, and there's also several ways that the reverse mortgage could be used to pay for the prescription. So first and foremost is the reverse mortgage could provide access to income tax-free cash for you to be able to pay for the prescription. That's obviously going to depend on your age and home value and things like that, but that is a possibility. It could help retain retirement savings. So again, instead of using retirement savings to pay for the medication, you could use the proceeds from the reverse mortgage, or you could do a combination of retirement savings and reverse mortgage proceeds. You could also consolidate debt to free up cash flow. So if you could consolidate your mortgage, car payments, credit cards, etc., into the reverse mortgage, it could free up enough cash flow that you could actually afford to pay for the medications. And then the last one here is to be better prepared for other large expenses during retirement. So again, instead of wiping out your entire retirement savings, the reverse mortgage could help you either retain those or have funds available from the reverse mortgage so that you're better prepared for other large expenses during your retirement, such as future health care costs, home repairs, car repairs, other financial shocks that are likely to pop up during your retirement. So let's take a look at the scenario of Diane. She is 65 years old, $4,100 a month of income. She owns her home free and clear, and she has $185,000 in retirement savings. This woman, Diane, is typically not somebody that would ever even think about or consider a reverse mortgage, but she really wants and needs to lose weight, and she's tried everything, right? She's tried all the lotions, potions, and pills. She's tried the diets. She's tried Zumba. She's tried everything that she can, and just nothing ever has worked for Diane. And she could afford the $1,300 a month cost for Wegovy, which is what she wants to do. But, $1,300 a month, that's going to make things a bit tight financially for Diane. So Diane reached out to see if a reverse mortgage would work for her. And so we came up with a couple different options for her. So the first option is to draw $1,300 a month from the line of credit to pay for the medication. And this scenario is represented by this bar chart here. So the blue represents the home value appreciating at 4% annually. And historically, that's pretty accurate as far as an average. Obviously, some years are more, some years are less, but on average, it's about 4%. The orange represents the loan balance. And we can see initially we're starting off with $19,000, and in 15 years that grows to $485,000. There's two reasons this line of credit, this loan balance is growing, and that's because first, Diane's going to be drawing out $1,300 a month from her line of credit to pay for her weight loss medication. And secondly, we are assuming that Diane is not going to be making a monthly mortgage payment towards the reverse mortgage. She still has to pay her property taxes and her homeowner's insurance, but because she's not making a payment, the interest and mortgage insurance is getting added to the loan balance. So that's why this loan balance is increasing over time. The green represents a line of credit, and we can see initially we're starting off with $149,000, and in 15 years, Diane would have drawn this down to $24,000. And so she's able to draw out that $1,300 a month, and like I said, over time, she's going to draw that down. Now, what's interesting is in 15 years, she has $24,000 left, and we're starting off with $149,000. If she drew $1,300 a month for 15 years, she would have actually drawn out $234,000 out of this line of credit. And I know that sounds weird, especially since we're starting off with $149,000, but the reason that's happening is because any funds available in the line of credit are growing at the current interest rate plus 0.5%. So even though she's drawn out way more than what she initially started with, it's because of that growth in that line of credit. Option number 2 is to just draw $650 a month, so half of the cost of the prescription, and then pay the other half of $650, just pay that cash with her monthly income that she has. And this scenario is based on this bar chart here. Again, the blue represents the home value, the orange represents the loan balance, and then this line of credit is the green, okay? Very, very different numbers. And in fact, if we look at the line of credit, we're starting off with $149,000, and in 15 years, it's $236 or $236,000. Again, by drawing out the $650, she's drawing out less than the growth in that line of credit, so therefore the line of credit is actually growing even though she's drawing from it. Plus, in 15 years, when she's 80, she has $236,000 that she could then draw from if she needed to pay for in-home care, remodel the house for aging in place. All of a sudden, she has a big chunk of money that, again, she could draw from if she wanted to. From a numbers standpoint, for me, this is what makes the most sense for Diane, because she's not impacting her retirement in the fact that she's not going to be super tight every month financially because she's only drawing out $650 to pay for her medical prescription. So again, I think this option makes sense, but it's going to really depend on each individual and what makes sense for them. So again, let's look in 10 years. She owes $155,000 and $196,000. This is with option 2, but with option 1, she owed $270,000 and had a $81,000 line of credit. So there's about $120,000 difference between the two. So again, that's why I think that this makes more sense. She's retaining more equity. She has a larger line of credit to deal with future expenses. To me, again, this is what would make sense out of the two options and the weight loss that she has achieved. So we just saw with those charts and examples some really good reasons to consider getting the reverse mortgage to help pay for weight loss medication. First and foremost is the ability to be able to actually afford to pay for it, since Medicare won't. And that weight loss medication, the top 3, are really, really expensive. Secondly, you're not getting into credit card debt, which again, being retired, living on a fixed income, credit card debt is just a devil you do not want to dance with. The beauty of the reverse mortgage is that it creates flexibility in the monthly mortgage payment. So we just saw there was a couple different options. One is to just draw money from the line of credit. Other option was to make a payment towards the mortgage. And I mean, there's just a lot of flexibility with it that any other type of financing is not going to have. So should her financial situation change, she doesn't have to keep making the monthly mortgage payments if she doesn't want to. And then she could resume them again if things change again. So again, it's just a lot of flexibility that the reverse mortgage provides. Now, she still has to pay property taxes and homeowners insurance. The other thing is it, and I think this is really important beyond being able to pay for the weight loss medication, and that is creating an additional source of retirement funds with that reverse mortgage line of credit. And the reason that's important is that you are likely to face other financial shocks during the rest of your retirement. That could be future healthcare costs. That could be home maintenance costs, like a new roof or a new heating and air system. There could be long-term care issues that pop up. But what we're doing with that reverse mortgage is creating another source of funds to be able to deal with those issues when they arise. And then obviously, there's some big benefits to being able to actually get the medication beyond, affording it. And that's an improved quality of life. Weight loss brings with it an improved quality of life. And so she's going to feel better, both physically and emotionally. So lots of reasons to consider getting the reverse mortgage to pay for the weight loss medication. So you want to see how this would work for you? You want to look at your numbers, want me to do some forecasting, look at different options, have questions about the reverse mortgage, give me a call. There's no cost to speak with me. There's no obligation, and I'm happy to put those numbers together for you and, again, answer any questions that you have about the reverse mortgage. I look forward to speaking with you. Thanks.